It's 9:30, so we're into, we always like to kick these things off on time. If anyone does have any dramas at all, during the session, I've got the chat box in front of me. I'm hoping I can use it. It's still experimentation for us, but don't let perfect get in the way of better. So let's start off. First of all, I want to thank everyone, those who were with us on Tuesday. There's great feedback and really appreciate that. Hopefully you'll see from this we've been able to improve our software and application for this session. Let's hope that comes through the way we're hoping it to. And also thanks to Michael for putting his time and effort in here today with us, because one of the things we want to do with these webinars is provide, this is a forum for quick, regular information, free content to help everyone through the process. Reality is that for many of you out there, you're going to need specialist advice on certain aspects. But if we can get you to get some free advice earlier through the webinar, we're apt to do that. And probably today, I'm especially happy to have Michael here because it's his birthday.
Thank you.
There you go. So happy birthday to Michael. I don't know how that little one is at the bottom there, but it's also how much a few years can make a difference. So happy birthday to Michael, 26th of March, 2020. Didn't see that coming.
Yeah, okay, you got me back.
There you go. So let's talk about all this. The background. We're talking about the stimulus measure today that is being built on the Rod Baker singing to you too. Well, happy. Thanks, Rod.
Love it.
We're talking about the boosting cash flow for employers. And to be quite honest, sometimes it's hard to smile at the moment. It's hard to be happy about everything that's happening. But we just got to keep busting our way through this. And really clearly from the advice we've been looking for through the ATO and various other information providers that we've been trawling through, is a big thing in there in red is the stated purpose of these measures, which is to support business cash flow, support employment retention, and improve business confidence. They're the stated purposes. I think that's been really clear. You reckon, Michael, that in everything we've read, that's what it's all about?
Yeah, it's not so much a stimulus, it's just support and keep the status quo where possible.
Yeah. So it applies to eligible non-profits. The first set of measures allowed for a benefit up to 25 grand. The second set of measures, which superseded the first set, so lucky we didn't go too early on this, go up to $100,000 of potential cash flow benefit. I'll make the point, cash flow benefit, not cash. We'll work through that in some examples. POEG withholding is the mechanism to be able to give it. So again, that feeds back into the idea that it's for employees and employment retention, which does include directors and associated parties. And the BAS and the IAS lodgements are going to be the mechanism by which we can see how there's going to be some sort of benefit coming in. So there's a bit of background. We're going to go through a few examples as we work our way through this. But before we get to that, let's talk about some of these issues we've got to consider, because it's not just a free hit. We were just actually literally chatting a few moments ago. You'll see again where social distancing is required these days. And Michael and I were just chatting before this about how do we actually make sure that the right measures are in place for the right clients. So some of these issues to consider. Need to be registered from the PAYG withholding at 12th of March. Maybe, Michael, you want to share just what you've done in the last 15 minutes on some integrity measures?
Yeah, certainly they've been light on the detail and a bit of research. Just in the last 15 minutes, there are going to be some very big integrity, I suppose, options that the tax office will put in place. And one of them is that, yes, you've got to be registered for withholding tax, but they're very aware of people artificially giving themselves wages when they've maybe never done it before. So they're looking back at history. They're also looking to make sure that essentially you've actually had some taxable transactions, so that you're not actually grabbing a dormant company and putting in an application and getting a minimum $10,000 back. So from what, I'm not quite sure how they're going to do that, but the indications are that you might have to have your 2019 tax return lodged. So if it's not lodged, best get onto it and get it lodged. They are certainly very, very keen to say that Part 4A, which is basically their big stick that they can wield and say that's done for a tax benefit, and there'll be big penalties. So that's what I've just seen in the last 15 minutes. There's probably another 10 or 12 criteria, but I won't go through that now because that'll come out in the fullness of time. But in other words, I suppose the overriding, I suppose, objective out of that was to let people know that, yeah, we just got to be careful and don't do the wrong thing here.
Yeah, it's not a free hit for everyone. It's actually designed to be a measure around keeping business going and employment. And also just on the screen there, you'll see, just because you're employing someone, we have to work through things like single touch payroll registration and the right software is installed. So if you're using a piece of software at the moment or an application, whether it be MyOb, Xero, QuickBooks, the like, make sure it's, if you are registered for PAYG withholding, that single touch payroll registration has been completed. Work cover that needs to be updated, super guarantee obligations. For those in the building industry, there might be some co-invest, income link and the like. There might be various redundancy funds that go with that as well for different industries. Payroll tax, which whilst there's some concessions around payroll tax, there's still lodgement obligations. And also there's the future cash flow, thinking through if the PAYG is over $25,000 in a year, you may end up being moved to a monthly activity statement if you're on quarterly at the moment. So being aware of all that sort of those moving pieces before we think, okay, this is money for jam.
And you've got it written there, Tim, but we've actually discussed it, that it's not just what you've been doing up till now, but they will be monitoring you after as well. Make sure that it's just not a one-off transaction, that your future activity statements are lodged and that there's a consistent pattern. So they'll be, and the information, I think anyone who's listened to us before knows that the tax office have the ability now to have a lot of information on us. With single touch payroll and taxable payments, annual reporting, they know a lot about us. So it's not, we've had a few people ring in and said, oh, I just want to throw in enough money to get, the boost of 10 to 20 odd $1,000. They'll be doing a lot more. They will be looking at, are you registered for single touch payroll? They'll match it against your records. So yeah, as Tim says, not a free hit. Tread carefully.
Yeah, absolutely. Yeah. And then just a few more notes about the BAS lodgements, which need to be completed. The registration is a must. We'll talk shortly about some maximum benefits, and then we talk there about the entity must be active to be eligible. So I know we've got some discussions coming up with some clients about their choices around winding up their companies or businesses and the like, and this will have to be factored in. So the really big thing here is cash flow and understanding, and we're talking about on a week-to-week basis what the cash flow of your business is, which is including bringing in debtors that are already owing to you, how they're going to pay. There's so many pieces around this puzzle. So let's not just make it as the panacea. Let's work it as part of a more constructive process. So, and the second round of boosting payments, which we'll show you shortly, is also aligned to the PAYG withholding credits in the first round. So all lots of big words, but hopefully some examples in the moment will show you exactly what we're talking about. And probably Guru and Michael will be able to walk us through how these work.
One thing I've found out is that Guru is not, Tim and I are looking at a lot about the what is available for our clients and our family and the community. We've got a team here who are really delving into the how, because I reckon we went through 3 or 4 or 5 different scenarios this morning, and they're all different. And to be honest, there's no real answer to how it's going to play out. So I wouldn't use the word guru, Tim, but we'll give it a go.
We'll give it a go, yeah. But certainly a good point about the what versus the how. We're providing some what here. When it comes to how, we're actually also saying that, and be clear that there's no cash, as we should be showing today, coming in right now. It's cash flow benefit. So it's about gearing yourself up to be ready for it. And the guys in here are working feverishly. It's been fantastic. Their commitment to us is in the how they're going to actually implement all these next stages. So let's run through our first example, which will be common for a lot of people on the line who are quarterly lodgers. So potentially with PAYG withholding, most people would know you're either a monthly or a quarterly lodger. And the biggest thing for a start is you need to get BASs lodged, because this is the mechanism to actually get the benefit coming your way. So maybe, Michael, are you okay to run through, tell us about Brad or Bradley?
Sure. Sorry, people may have seen me popping a. Tim and I have been on the phone. It's basically out of our ears for the last 4 or 5 days, so losing my voice a little bit. So Brad, 4 employees, pretty common. Pay-as-you-go withholding, pays the same employees along. So we've got $12,000 that he would normally have to pay in his March BAS and $12,000 in his June BAS. So effectively, the benefit, if the overall benefit, and this is what we have to look at, Brad, will be a credit, if you like, of $48,000. And the how is where we're running into difficulty, because we're not quite sure sometimes at what point it comes in. But at this stage, in this example, Brad would not have to pay any pay-as-you-go withholding in the March BAS, because basically he's underneath the threshold, and so therefore it's $12,000 worth of money that he can keep within his business. Similarly, for when lodging the June BAS, Brad wouldn't have to pay any withholding tax. Now, also in the June BAS, Brad gets, because they've doubled the amount that you're entitled to, Brad would also get a $12,000 credit in the June BAS. So in effect, he's getting $48,000 over, probably talking 6 months, and then another $12,000 credit in the September BAS. So a bit hard to explain, but essentially it comes back to, that's what his $12,000 per quarter. His benefit will be $48,000 over the next 6 months.
Yeah, so he still potentially is paying on his March BAS in particular, where he's only getting the PIG withholding, so he still might have a GST liability. Yeah, in the June BAS, there's a $24,000 credit there, so perhaps there's some cash flow relief there. And the September BAS, it'll depend on what his overall liability is as to whether he's paying or getting a refund.
That's an important point. You're right there, Tim. That in the June BAS, the actual benefit is $24,000. So the $12,000 credit plus he gets another $12,000 credit in the June BAS. So the credit, basically the benefit in this example is $12,000 at March, $24,000 June, and then $12,000 September.
Yeah, absolutely. And we just had a question come in here from Daryl around the March BAS driving the credit for the June, and then June driving September credit. And that's a coincidence here, Daryl, because we use the same number of 12,000. What we might do is go to the next example, which is the monthly lodger, and you'll see how it's actually based upon the March to June period for the first round of concessions, and then how it applies to June and September BAS. So let's move into the next example, being the monthly lodger and the hairdressing salon. Maybe you want to run us through this one, Michael?
Yeah, well, basically the theory behind this is that if you're lodging on a monthly basis, when it comes to March, you're only lodging for 1 month. So to bring it in line with the people who are businesses who are lodging 3 months of PAYG, basically multiplying with the legislation says 300%. So we like to make it easy, just multiply by 3. So the benefit to Sean in the March BAS is $27,000. Not cash, there's a benefit. Now, we don't know, maybe there's some cash coming back depending on the rest of his liabilities. Also depending on, does he have outstanding debt to the ATO?
Yeah,
because I'm quite sure, and we were on a webinar the other morning, and the tax office have designed this, that I think that they might get paid for outstandings out of all this as well. So again, just my thought, maybe it's a bit cynic in me, but so yeah, so the March BAS for this quarter, this monthly lodger is $27,000. Now, because he lodges monthly, he will get a credit of $9,000 in April and $9,000 in May, but it's capped in this first period up to June of $50,000. He'll only get a credit of $5,000, which is the difference between what he's already had a credit for and the $50,000. But in that June BAS, he'll get 25% of the $50,000 as a credit as well. So in the June BAS, he'll get 5,000 plus 12,500 as a credit against any other liabilities that he may have at that time. And then, of course, you can see that he goes through to get a credit in each of the months because he lodges monthly up to September. Total benefit to Sean is $100,000 credit against pay-as-you-go and BAS liabilities.
So so you'll see there's 8 actual steps to getting the money back in the case of a monthly lodger, which for me online, that's you. So we can work through this with each person. Fair chance we're suspecting that in the March quarter, there may in fact be some cash credit because of the ×3 aspect. The June one may end up being similar because of the aspect of the double whammy with the credit and the 25%. The others, who knows? Let's wait and see how that plays out for each person. But you can see, hopefully, you can help there to see how the 100,000 is split up over in tax credits and potentially some cash overflow between now and when we talk about September BAS. For most people, that's lodged late October, early November. So we're talking about from here to where we are there, the best part of 6 to 8 months.
Yeah.
Let's run through the minimum payment one, because this might be relevant for those who are thinking, okay, I don't have PAYG, or I don't have much PAYG, I should say, and how that works.
Yep. So this example, Gary in a courier business, he has 2 employees working casually and they only earn about 10 grand a year. So there's no pay-as-you-go withholding that is required to be taken out by Gary. So essentially, he, as normal, but again, going back to the integrity measures, he must have been lodging BASs in the past that had, and reporting things at W1 to say that he is paying wages. And so what will happen is that because he doesn't have a liability, he will be entitled to a credit of $10,000. Now, there may be some, if his GST liability is less than 10,000, and if he doesn't owe anything to the tax office, there may be a possibility of him getting that $10,000 back. Good possibility. And then, of course, when we get to, because it's limited to $10,000 up to June, and then 10,000 after, in the June BAS, he gets 50% of the 10 or 5 grand, and then 5,000 in the September BAS. So $20,000 benefit or credit for Gary.
Yep, and that's the minimum benefit. That's arisen from in the first stimulus, where they're talking about 2,000 to 20,000. So now whether that changes through any further stimulus is still obviously to come. But as it stands today, and legislation, I suppose that's really important with this. So that's why I've gone with this now. Is this legislation got passed through Parliament 11 o'clock on Monday night. So now this is actually in the game, and something we can talk about with some certainty around the what, as Mark keeps touching on the how, is the next mechanism we have to work our way through.
Yep.
Yep. So we just actually, we want, as you mentioned the other day, we want to keep these sessions short and sharp. Your time's valuable. We don't need to spend ages listening to us talk. But some actions from today. So right now, from our actions we're talking to clients about is cash flow, and more we want seeing clients need to do a week by week cash flow. So simple spreadsheets. If you've got great software applications, by all means do that, but don't spend the next month learning how to do a cash flow through software application. You can use a spreadsheet. Now's not the time for that.
I think, Tim, as we do when we're trying to put webinars together, don't let perfection get in the way of progress. Just get in there and have a go at it.
Yep, and we're very much evidence of that today again. So register for single touch payroll. So that's really, really important. If you are an employer who pays PAYG withholding or has a withholding statement, you must be registered for single touch payroll if you want to be eligible for this package, which will include, so therefore if you're on zero, you may need to upgrade your current registration. MyOld potentially the same, Reckon, QuickBooks, the like. If you're paying your wages through some sort of spreadsheet mechanism or back of the envelope type of scenario, this has become a really, really important single touch payroll. It's a bit hidden, but it needs to happen. And maybe we'll talk about the business continuity plan. Do you want to talk about that?
Yeah, look, business continuity plan. At the moment, most people are, how do I get through this? But certainly you've got to have some form of plan. We're putting one in here, and from tomorrow, our aim is to have no one in the office, because we just don't know what's going to be coming up. So we've got to prepare for that. But certainly we've put one together for ourselves. We're toying with the idea of running a webinar on a business continuity plan. So if it's of interest, maybe put your hand up or something like that in the chat line or something like that to give us a bit of feedback. But it's really important to be, I suppose, doing whatever you need to be doing. And don't go into the continuity plan too much, because each business is different. But actually, we might do that, Tim.
Yeah, I think we'll do it. Mickey's already come to us and said yes, so we've got one person interested, so that's enough. There'll be others who are interested. So next week, we're actually at this stage we're thinking probably Tuesdays and Thursday mornings we'll run these. That's like we have this week, around the similar time. We're recording them as well, so let's do one next week on the continuity plan. Sharon, yeah, absolutely, we'll do that for sure. And last thing we point on the actions for today, we'll probably drive this home a little bit, but having your paperwork and bookkeeping up to date so your BAS is ready for lodgement, or if you've got outstanding BASs, outstanding tax returns. If you recall back to within the GFC, when there was a stimulus package, it was built around actually people who got it because they made their lodgements on time. So get things in place to make sure that's the case. And that may mean involving a bookkeeper. It may mean contacting us. It may be doing something yourself in the business. But there is some really integrity measures around making sure that everything's ready to go in terms of lodgements, so you can be eligible for these benefits.
On that too, Tim, the tax office have said that we have some people on the first of each quarter have the information to us. Now we can lodge then, not a problem, but any credits won't be payable by the ATO until till due date 28th.
Yeah, 28th. Yep. Talking, yeah. And just to answer the question Melissa just posted up there, will we be hosting our normal private meetings via Zoom now or phone calls? Both. What we can do, whatever works with you as a client. So we'll be able to talk through how that looks. Today, I'm actually, I know for myself, I'm on 4 Zoom meetings today. So very happy to keep doing that. Phone calls, if that's what we want to do, a phone meeting, we've got a couple of those tomorrow. Whatever works. We absolutely geared up to be electronic for the next up to, however long this all takes.
Yeah.
Yep. And that's part of our continuity plan. And Mickey's asked a question about what if a company is able to claim it doesn't pay wages. So what we do will work through that as to, it was all about registration. This is designed to be around payroll primarily. There are some actually different methods for non-profit organisations, some special rules around those. So it might be worth, if anyone's involved in some non-profits, then let's talk about how that potentially looks as well. Yeah. Cool.
Yeah, this certainly today is about assisting employers. That's where the tax office have come from and the government's come from in this measure.
Yeah, absolutely. And there's other cash flow measures we're going to talk about, which will be things like the banks, the guarantees, which I've had a couple of questions on yesterday from clients, take your money out of super, and tips and traps around that option also. So there's lots coming as well. And again, the idea of these webinars is so we can give information out that's general information, helps everyone get some broad speaking about, okay, we're reading press releases, let's get some reality into what it means. Some of you are going to need some extra help from us, and we'll work our way through that on a case-by-case scenario with the team.
Yeah, good. And to be honest, that's what it is right now. As like we went into last weekend thinking, one thing, and we came out of the weekend a whole lot different. So it could be the same again this weekend. We'll see.
Yeah, absolutely. Question there so I've got a bunch of questions flying through at the moment. So I might answer a couple of those if I can. John, Elizabeth will be the person for you to speak to, definitely, to get this sorted. Thank you, Melissa. Really appreciate that. We had a great comment there from Melissa, so really thank you for that. Thanks also, Karen. Steve, good question about investments. Let's have a chat. And William, no dramas at all. Very happy. Thank you very much for your feedback, guys. We're doing this on the fly a little bit too. So we're learning for ourselves about new methodologies, new communication. We're hoping at the end of this, we come out of this better too, in terms of some skills we learn. We know people out there are hurting, and we know there's a lot of uncertainty, and uncertainty breeds fear. So also, I think most of the people on the line here are business leaders. Our message to business leaders is your team looking to you for leadership. And if ever there's a time for leadership, now's the time to actually provide that. So please do that. A quick question here from Scott as well is the credits, do you think the credits on the BAS will offset any GST payable on the BAS? We think so. Yeah, we do, Scott. We think it'll offset the GST if you've paid any number. So
there's one that's come through on Q&A, which I didn't even know existed. Tim, out to the side there, not on the chat line. Has the apprentice payment system been authorised yet? It's authorised. There'll be a registration process around the apprentice payments, and that will be in April sometime. So yeah, that's gone through as legislation. Jim asked that question.
Okay, cool.
Yeah, so it's there. There will be a registration process, which we'll get some details on, no doubt, in due course.
For sure. And to Karen asked if we're registered with you or we get notification of upcoming webinars. The way to get notification of upcoming webinars that we're running and the registrations will be by subscribing on our website to our newsletter. If you go to the front, we've changed our website. So the front page of our website, you hit there, it's in the face about how to subscribe. That puts you into our database. And if you're not already there, you'll be a notification. If you got a notification of this webinar from us, then it was already organised. So you must be on your list already. And by extension too, feel free to share this to other people, be outside, because this is not exclusive just for clients only. This is information we're providing in general, and we want to help the broader community as well. So seeing through that whole process. Yeah, absolutely. We're all in this together. We're all sharing some pain together, but we can also share some knowledge together as well. Yeah, cool. Thank you, everyone, for the feedback. Thanks, Russell. Great feedback. Appreciate all that. We'll keep moving through our day and keep moving forward. But again, as seen on the screen there, you've got further questions, you know where to contact us. Please come and get in touch. We'll keep contacting you and working our way through it under bespoke arrangements. Some will need more assistance from us than others. Others will be able to go for it themselves. We just have to work through each individual case as it suits you best. So thanks so much, guys, and I appreciate the time you put into us. Thank you.
No worries.